You know that feeling you get sometimes? Like things are shifting under your feet in the global economy.
Yeah, that uncertainty.
Well, trade disputes are a huge part of that. And honestly, trying to keep up with it all, it can feel overwhelming.
It really can. I mean, everything's so connected these days. These trade things ripple out everywhere, and it's tough to get a clear picture sometimes.
Exactly. So, welcome to the deep dive.
Mhm.
We've been digging through the news, the reports, trying to pull out what really matters for you.
Mhm.
Today, we're jumping into the latest twist in the global trade situation, specifically these new tariff threats coming out of the U.S.
Right.
We've looked at a bunch of news articles covering President Trump's latest proposals, targeting Apple, the EU. Sounds like Samsung might be in there too, and how everyone's reacting.
Yeah, our mission here is really to cut through the noise.
Yeah.
There's a lot of instant reaction, a lot of speculation.
Yeah.
We want to help understand the core developments,
Yeah.
what the potential impacts could actually be across different sectors, and just get the different perspectives out there, aiming for clarity, really. Insights you can use.
Okay, let's get right to it then. So, President Trump kicked things off with a post on Truth Social aimed squarely at Apple.
He did on Friday, yeah. A post directly calling out Apple, talking about a 25% tariff on iPhones if they're not made here in the U.S.
Wow.
And he told Tim Cook this directly. The message was clear. Build iPhones for the U.S. market in the U.S., not India or elsewhere.
And it wasn't just Apple feeling the heat, was it? Sounds like it might spread.
That's right. When he was asked about, targeting specific companies, he basically said Apple wouldn't be alone.
Okay.
He named Samsung specifically and suggested other phone makers selling here could face similar tariffs, maybe by the end of June. The key thing, he stressed, was where they're made.
So build here or face tariffs. That's the message.
Pretty much. A really strong push for domestic manufacturing.
And then there was this other big one, a proposed tariff on goods from the EU. Sounded pretty steep.
Yeah, really substantial. A 50% tariff, he called it, on goods imported from the European Union.
50%.
50, with a start date mentioned June 1st, 2025. He said talks with the EU hadn't gone anywhere and basically wasn't looking for negotiation. His words were something like, we have the deal, it's at 50%.
That sounds very final. Not much room for discussion there.
It certainly sounds that way. A very firm, non-negotiable kind of stance presented there.
But amid all that strong talk, there were some attempts to maybe calm the markets down a bit from Treasury Secretary Bessent.
Yes, Scott Bessent did try to ease some of that anxiety. He suggested the U.S. would be announcing some major trade deals in the coming weeks. So you could see that as trying to balance the tariff threats with maybe the hope of some negotiated agreements elsewhere.
right, a bit of carrot and stick, perhaps. So how did Apple react, and the tech industry generally? That $100 billion figure jumped out.
It was a huge reaction. Apple's market cap reportedly dropped by more than $100 billion right after Trump's announcement about the potential tariffs.
Wow.
That really shows you how seriously the market takes this stuff. The potential financial hit for a giant like Apple is just massive.
And it's interesting because Apple has already been, trying to move things around, right? Diversifying away from China.
Exactly. They've been actively shifting some production to places like India and Vietnam. That was seen as a way to, reduce their risk from exactly these kinds of tariff situations.
But maybe not enough, it seems.
Apparently not enough to avoid this latest threat. It suggests that even those significant diversification efforts might not fully shield them this time.
And they've also invested heavily in the U.S., haven't they? I remember hearing about job creation plans and facilities.
Oh, yeah, big time.
Yeah.
Plans to invest over $500 billion in the U.S. over 4 years.
$500 billion.
Yeah, creating 20,000 jobs, a new server farm in Texas. Tim Cook even put out a statement talking about U.S. innovation, being proud of their investments here. But even that level of commitment, it seems, wasn't enough to head off this tariff threat.
And did they give any sense of the immediate financial impact, like what tariffs are already costing them?
They did, actually. On their last earnings call, Apple mentioned they're potentially looking at a $900 million headwind just from existing tariffs in this current quarter alone.
$900 million in one quarter.
Yeah. So that gives you a real sense of the immediate financial pressure these trade measures can cause.
Which brings us to that big question analysts are asking. I mean, how feasible is it for Apple to just shift production to the U.S.? It sounds incredibly complex.
That's the multi-billion-dollar question, isn't it? Moving Apple's huge, intricate manufacturing operations stateside, I mean, the logistics, the economics are just staggering.
Right.
Analysts are looking at everything: workforce availability, the sheer cost, the supplier networks that exist elsewhere, how long it would even take to make such a monumental shift. It's definitely not flipping a switch.
Yeah, not simple at all. Okay, let's shift over to the European Union. That 50% tariff threat. How did they take that?
Well, not lightly, as you can imagine. The first reaction was definitely serious concern. Leaders were calling for a measured response, using words like calm.
Calm, but maybe firm too.
Exactly. There was this consistent theme. We need to be resolute, but also thoughtful about how we respond.
Any specific comments that stood out?
Yeah, quite a few. The Dutch Prime Minister, Dick Schoof, said they'd calmly consider it, but respond robustly and resolutely.
Okay, robust.
Sweden's Finance Minister, Elisabeth Svantesson, called it a senseless escalation, bad for both sides, and pushed for more free trade. Germany's Economy Minister, Katharina Reiche, warned, nobody wins in these disputes, and urged the EU Commission to negotiate.
So a lot of calls for negotiation, finding a solution.
Definitely. And Ireland's Deputy PM, Simon Harris, stressed needing substantive, calm, measured, comprehensive dialogue. France's Trade Minister, Laurent Saint-Martin, basically said, we want de-escalation, but we're ready to respond if we have to.
So disappointed, maybe, but also preparing for the worst.
That's the feeling. Disappointment at the escalation, but a very clear determination to protect the EU's economy.
And the EU had already done some planning for this kind of thing, right? They weren't totally caught flat-footed.
That's true. They had previously talked about phasing in tariffs on less sensitive goods. And they had a retaliatory package ready, potentially hitting about $108 billion in U.S. goods.
Okay.
They'd also proposed mutual tariff cuts, showing they preferred a negotiated way out.
But it sounds like the U.S. wanted more than just mutual cuts.
That seems to be the EU's take on it, yeah. They felt the U.S. wasn't happy with just reciprocal cuts and was actually pushing for the EU to cut tariffs unilaterally first.
I see.
And the EU also wasn't willing to bring their digital tax plans into these specific trade talks, which the U.S. had wanted.
So if this 50% tariff did happen, which EU sectors would get hit the hardest? The Financial Times looked into this.
They did. And several big sectors could be in trouble. Pharmaceuticals are huge. Nearly $80 billion exported to the U.S. just last year. That's the biggest category.
Okay, pharma. What else?
Aerospace is another concern. They already face some tariffs, so adding more cost would hurt. And then, of course, cars.
Right. We see a lot of German luxury cars here.
Exactly. Think Audi, Porsche, Mercedes-Benz, also Volvo. Manufacturers exporting from Europe to the U.S. would be significantly impacted. And it's worth noting, the EU exports way more cars to the U.S. than they import.
That makes sense. Any other key areas?
Food and beverages. Maybe not as huge in value, around $25 billion, but politically very sensitive.
Ah, like French wine, Italian cheese.
Precisely. Those iconic products, French champagne, Parmigiano cheese, often become targets for retaliation, so expect those to be in the mix. And finally, agriculture, generally raw materials, finished products, it's about $40 billion in two-way trade that could be affected.
Wow. It really paints a picture of potential disruption across the board in Europe. So zooming out again, what's the wider effect of all this talk? On the global economy, the markets, it feels uncertain.
Uncertain is definitely the word. Reuters used phrases like erratic trade rhetoric and messy economic outlook.
Yeah.
And they reported global investors basically saying they feel like they're flying blind. Making long-term bets is harder now than any time since, well, the start of the pandemic in 2020.
Flying blind, that's quite a statement. Investors just don't know where things are heading.
Pretty much. There are worries about, will the U.S.-China trade truce hold? What about U.S. budget gaps, currency swings? It all adds up to caution. We saw quotes like Francesco Sandrini at Amundi saying there's just no clear macroeconomic visibility, so they're focusing more on short-term speculation.
Not long-term investing.
Right. And Florian Elpo at Lombard Odier mentioned portfolios shifting to neutral. Basically, nobody wants to take big risks right now because the reward isn't clear. Even hedge funds, according to JP Morgan data, aren't making strong bets either way on stocks or bonds.
And it seems like this tariff talk is showing up everywhere now, even in company earnings calls.
Oh, absolutely. It's almost become like a required topic for CEOs.
Really?
Yeah. For example, the CEO of Walmart, Doug McMillon, basically said they might have to pass costs on to consumers, raise prices. Retail margins are thin, he said. Hard to just absorb big tariff hits.
Okay, that makes sense.
And the CFO of Deckers, they make Hoka shoes, Stephen Fashing, said they expect tariffs could add up to $150 million to their costs next fiscal year.
Wow.
And that could hurt demand, even though they're trying to find ways around it. So, yeah, it's having direct impacts on business planning and potentially what you and I pay for things.
Definitely hits home. Now, just briefly, what about the rest of the world? The U.S. seems to be juggling trade talks everywhere.
Yeah, it's like a multi-front situation.
Yeah.
You've got China existing 34% tariffs on some stuff, but also this recent 90-day pause for more talks.
Okay.
India faces 26% tariffs, and their trade minister was just in D.C. trying to work out a three-phase deal.
Right.
And Japan's feeling it, too. Their auto parts suppliers for Ford, Nissan, Toyota are worried about surviving potential U.S. tariffs.
So pressure all around. And the U.S. stance in these talks seems quite firm, especially with the EU.
That's the reporting, yeah. The U.S. is apparently pushing the EU for unilateral tariff cuts, meaning the EU cuts tariffs first as a condition to avoid more U.S. tariffs.
So not just meeting halfway.
Seems like the U.S. is asking for more upfront concessions from trading partners right now.
Okay. And finally, amidst all this friction, there was some high-level contact between the U.S. and China recently.
Yes, that's right. Despite all the ongoing tensions, especially around things like AI chip exports, there was a high-level call between U.S. and Chinese officials, and both sides apparently stressed keeping communication lines open, which, is at least a sign they want to manage the relationship, even with the disagreements.
Okay, good to have those lines open, I suppose. So let's try to wrap this up. What are the main things we should take away from this deep dive today?
Well, I think there are a few key things. First, President Trump is definitely taking a more aggressive line on trade, zeroing in on specific companies like Apple, maybe Samsung, and hitting the EU with a really significant tariff threat.
Right, the assertiveness.
Second, these moves could cause real economic ripples, serious consequences across lots of different sectors, both here and for our trading partners.
Okay.
Third, the reactions we're seeing cautious, concerned, but also resolute. They really highlight the risk of these disputes escalating further.
Yeah, it feels like things could spiral.
And finally, all of this just amps up the uncertainty and the volatility in global markets, makes it harder for everyone, from investors to businesses, to plan for the future.
It really does underscore how tangled up our economies are. Decisions made about tariffs on, say, phones or cars can echo through so many industries and ultimately affect businesses and maybe even us as consumers. Definitely something to keep watching.
Absolutely. And, as these trade winds keep shifting, it leaves you with a pretty big question, doesn't it? In this super connected global economy, who actually ends up paying the price for these escalating tariffs? And what are the unintended consequences we might not even be thinking about yet? Definitely something to chew on.